everyone, this is a trader investor. In today's video we're going to look at Netflix, and Netflix is forming a demand zone, an accumulation zone, and we're going to talk about that. So that's why I'm starting out with the Wyckoff chart. Why is Wyckoff important, and how do we use it to take advantage of the chart setups when we want to enter positions for potentially swing trading, not just getting in and out the same day, but holding positions for a couple of days. And why I want to do that is because when you have an accumulation and there's this big upthrust that happens for a while, right? And upthrust, I don't want to confuse you with UTAD and the regular upthrust. What I mean is once we get out of an accumulation zone, there's a big sign of strength and price moves for a while, and it could even go into reaccumulation until it is done, and then it goes into distribution. So there's quite a big movement, and the only way we can capture this big movement is to understand whether we are in an accumulation, reaccumulation, distribution, redistribution, and back to accumulation. So if we understand this cycle and knowing where we are at the present moment will give us an edge for our entry. So how do we set that up? Is by looking at and understanding the Wyckoff chart. So price doesn't move in one direction, whether it's up or down. It doesn't just move straight there, right? It doesn't slice through the chart that way. The way it moves is it moves in cycles and it moves in phases. And there are times where institutions want to accumulate, they want to grab as many shares as they want, and this is the time where a lot of retailers think price is going to keep going down and keep selling, but institutions are accumulating. And then when they are done accumulating and they've taken the market where they want it to go, they start distributing. And again, retailers have this feeling of FOMO, oh, I don't want to miss out. Price has just moved from here to here. It's going to go that same distance again, and retailers enter. But this is where institutions are distributing. So it's very, very important to understand this. And I've done a couple of videos on how to really identify this an easy way. And where many people get slightly confused and get it wrong is when we get into an area of reaccumulation, it is easier to think of it of, oh, it's distribution and price is going to go down. Especially when we see this terminal shakeout, oh yeah, that's my confirmation price is going to go down. This is actually an area of manipulation. They're going to stop hunt low and reverse price. Or they're going to pretend they're going to go low, trap short sellers, and reverse it back up. So that's an area where we need to be careful and really understand what is accumulation, what is distribution, and even equally important, what is an area of reaccumulation or redistribution. Very, very critical to understand that. And one of the easiest way for me is when price goes outside the range, I want a confirmation that price is going to continue to drive down, reverse and test that support area and make it act as a resistance. This is where you get your confirmation that this was a distribution. And where do you see that? You see that right here. You see that right here. Price breaks the support and it tests it and makes it a resistance, and price goes down. That's how you get your confirmation that this is a distribution and not a reaccumulation or even an accumulation. Another sign that you have distribution is you break it on the upside, trap retailers to make them believe, oh, price is resuming. These FOMO traders are now jumping in here saying, oh yeah, it's moving up, but this is actually upthrust after distribution, because what does price do? It comes down, tests those areas as resistance, and price drives down. So it is very, very critical to understand this piece as we move forward. So accumulation is a demand zone, meaning the majority of the demand is sitting there. Retailers, we are not the demand, right? The institutions, the big money, pension funds, hedge funds, mutual funds, they're just waiting for us to make a mistake, meaning we're going to sell it to them for cheap. And then they're going to grab this to take the price high. So this is their demand zone, and this is the supply zone. Why it's a supply zone? Because there's more supply than demand. Therefore, price is going to continue to go down. So once we have this clear understanding, now the main purpose of this video is not an education on Wyckoff, but how we use Wyckoff chart, the Wyckoff theory, the Wyckoffian logic, to apply it to a trade like Netflix. Because Netflix, to me, is setting up a very nice area of accumulation. And let's go to the charts right now and take a look at that. So Netflix had earnings earlier last week, and after earnings, what happened? Price significantly dropped. What does that mean? This means to me that this was a distribution, and it's not a normal distribution where you get a break here, you get a test here, and you get to do this. No, in this instance, they didn't even give you that chance. They took the price right down here. I've done a video earlier this week where I showed you how this went through a couple of order blocks. But that's not the purpose of this video. Now, in this video, what I want to focus on is, what is this area telling us right now? What is this telling us? If we are in an understanding of the accumulation phase, if we say, okay, there is no redistribution, they're coming straight down, they've taken it to a price where they want to grab a lot of shares for cheap, they are in an accumulation phase right now. And what are my signs that are telling me this is a potential accumulation? We had the selling climax, we have an automatic rally, and we're starting to test those lows. We're starting to test a high. We're forming a base here, and we had a terminal shakeout on Thursday. And as we zoom now to now that you have an understanding on where we are sitting, so we have this terminal shakeout, and if even confirmed with a pin. Everybody who thought, I'll just draw this line for you here. Everybody who said this is a strong support, if we break this support, I'm going short, they just got trapped. Sorry, this was not what the institutions were intending. We tricked you into going short. So anybody who went short here got trapped, and price reversed, and it formed this pin. So this pin for me is indication number one that we have terminal shakeout. Not always, but at least that's an indication. Indication number two is after we have this pin bar, price started to drive up, and it pulled back, and it gave us E1. So what does E1 mean? E1 is after terminal shakeout, price starts to reverse, and it does not test the terminal shakeout lows anymore. It is done with those lows, and the intention of the institutions is to keep driving price up. So this is where we form E1. And take a look at E2, because we're going to talk about that right now. So E2 forms at the highs here, because this is our base, right? We've formed this area of consolidation, but instead of thinking of it as just a simple consolidation, I want to think of this as accumulation. So this base is here. So now once price, which is very close to it, breaks above, that's E2. And the next thing I want is price to test those areas and reverses. That becomes our E3. Another possibility is price has a strong move up and it has a short pullback and reverses. It never tests this area. Both of these are equally valid E2s. Equally valid E2s. So this, I mean E3. This is E3 or this is E3. Depending on how the charts are formed. I don't care how they're formed. I just trade the charts. Therefore, I just wait for price to break above, have a pullback. The pullback does not close below this test area. Price reverses. That's my E3. And so E2 is as soon as price breaks here. That's my E2. So you can't see it clearly here. I'll just put it down here for you. So that's E2 once we break that. So if we have that understanding, then we know now that Netflix is setting up to give us a good E2 entry and a good E3 entry. E2 and E3 are your better, less riskier. By less riskier meaning more confirmed moves. And an E3 is not just when we have a wick here. That's not what an E3 is. E3 is we have a close up here, right? Somewhere here. We have a close here. Then that's your confirmation of an E2 to have an E3 move this way. So don't just jump into a wick that fakes you that it's making this move and come back. Make sure you have a close above this test area. That's E2. You can take that or wait for a pullback and take that. So I am believing that the institutions have taken price where they want it to be, and they are going to close this imbalance and close this gap and keep taking the price up higher. I'm expecting 570, 580 area to come to us in the next couple of months. So now, could this be wrong analysis? Could this be a redistribution and they want to take price lower? Absolutely, could be. Until the charts tell us, we don't know, right? So if price does this and we enter this as E2, definitely set stop somewhere here, because then we are wrong. If price comes back here, we are wrong. So we have a tight stop. Now if this is UTAD, then what price will do is it will come down here, retest these and continue, and so you can have a new E1, and in a Wyckoffian terminology, this new E1 is formed for you, right? So we are at this E1, we skip reaccumulation in this instance, and we're going right to redistribution, because it is no longer an accumulation. We had a distribution, and this is where we're sitting, and price wants to keep going down, right? If our analysis is this is a new accumulation, this is our E1. If our analysis is wrong, then we are in a redistribution. And in a redistribution, it is important to note one thing. UTAD can happen or doesn't have to happen, right? It just keeps respecting these highs and price keeps going down. So that's a possibility. So keep that in mind. So two things that could happen in Netflix: this becomes a strong resistance, price just continues to drive down, and this is a redistribution. Price gives us a fake breakout, and it does this. Again, this is a redistribution. So both of those are valid. One reason for me not to jump in thinking this is a redistribution, if price does this, I'm not going to jump in and say this is a redistribution, this is E1, because what I'm going to look at is because my strong belief is this is an accumulation. It could be where they take this price down and make a new terminal shakeout. Maybe this is what they want. Maybe this is my new E1. So because I'm in this range, I'm not rushing for an entry to the downside. My downside entry is not really E1. My downside to the entry, if this is a redistribution, it's E5 or E6. I'm going to stay away from E5 because I believe this is accumulation. E5 could act like a terminal shakeout, like this here. So really E6 is where I want to enter if this is going to the short side. Meaning, price breaks out here, price tests this support as resistance, price drives here. So in terms of marking them, this is E4, this is E5, and this is E6, right? So this is where I want to enter for me. E6 is my zone. I want to see this. Whether this zone is up here testing this resistance or a little bit lower, it doesn't matter. I just want to see a pullback that gets rejected before price reverses and I get an entry, something like this. So that's why it is clear to understand where are we in the cycle, what phase are we, where are we in a demand zone accumulation, are we in reaccumulation, are we in distribution, redistribution, and then back to accumulation. So my belief is we were in distribution, price went straight through and now in accumulation, and it's going to reverse until my analysis is negated by not having this move, right? By not having an E2 followed by an E3. If I'm getting a UTAD and a break below it, giving me a new E1 for short, I will enter at E3. But because we are in a redistribution, it's E3 and E6 are the exact same entries. One just shows initial distribution, the other one shows redistribution. Either way, this is how I'm looking at it. So very critical then in Netflix, where are we in the cycle? Was this a distribution that got sliced through and now institutions took price from 552 to the 500 area? Wow, that's $52. That's a big drop and a nice discount, right? A nice discount. That's a 10% discount, that more than 10% discount that we were able to capture, right? So was that something that they have taken and they want to reverse back and close this gap? That's my belief. My belief is we're going to at least close this gap, if not go higher, and this is a way to grab this for cheap. A couple of ways to position our entries. We can buy the comments straight out and say, well, I got it cheap and I want to have Netflix in my portfolio anyway, so I'm just going to buy the comments. Fantastic. But just wait to see if you have this discount price be the last discount and not further down. Or we can enter options, and when we enter options, we can do it on this week's expiration, the following week's expiration, 30 days out, 45 days out, depending on how far we want to swing it. For me, I want to see 30 to 45 days out if I'm swinging it, because I want to give price the opportunity to move and, keep doing this before it reaches here. So if I have shorter dated options, then I'm capped here. But if I have it longer term, then I can wait for this, right? And I'm going to trail my stops. I'm going to make sure that I'm not getting any break of structure as we move up. And I'm going to trail my stop and just wait for my targets to be reached. That's how I will position it by 30 to 45 days out option. So a couple of ways to play it. So now that you have seen the accumulation phase, now that you have seen where we are sitting in terms of the Wyckoff phases, then you are good to go for your next entry. What's important? We are going to be patiently waiting. I think that's a key part, is patiently waiting for us to move to the next phase. And I will also do more studies, more analysis on not just accumulation distribution, but also look at additional ways to focus on order blocks and how we're going to position our entries and take advantage of imbalances that the market presents to us as we head from order block to order block. All right, everyone, don't forget to like this video. That's my food, and I appreciate all of you who do that. And I'm gonna come back and do a couple of more studies this weekend. Take care, everyone. Have a great weekend.